Ethereum to drop below $2,500 within the next month. See why. That's what we're going to cover in today's videos, using technicals and measuring the psychology of the market. Is now the right time to buy, or should you be expecting a pullback? That's what we're going to dive into. So if you like today's video, like, subscribe, hit the bell notification. By the way, I'm Jagir, the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been trading crypto for pretty much 4 years now. I've been trading currencies for 15. Featured in the best-selling book, High Probability Trading Strategies, back in 2008. Now I bring that knowledge and wisdom to you to help you minimize your risk and maximize your upside. So let's dive straight in. So first of all, we did a video on Ethereum on May 5th, and we said, look, it's looking like it's making a high. There's typical chart patterns in the psychology, especially this panic buying, and we should expect a correction. That's what we were saying on May 5th. Then we did a follow-up on May 19th, which showed the initial part of the correction, but we said, hey, doesn't look like the correction is complete. We should anticipate a first leg down, a correction to the correction, which is a wave B, and then a movement to the downside again into this range. And guess what? That's pretty much exactly what happened. We've moved right the way down. If we look at here, I just want to remind you that this is important and how powerful Elliott Wave and Fibonacci can be. And by the way, I'm going to be launching my free crypto masterclass on Elliott Wave and Fibonacci analysis. It should be in the link below. If it's not, it'll be in a very near future video. We're just doing the final edits. I think it might be ready. So yeah, we got this first move down, which we spoke about. We got this move up, and then we got this next move down. Right? And that's what we were saying over here. These three moves that we should anticipate. And it's unfolded almost just textbook style, which is great. But now today's video is Ethereum. We should anticipate it to go below $2,500 per Ethereum, and we want to look at why. First of all, I'm just going to focus on some Fibonacci ratios. We've done a retracement and an alternate price projection that shows there's a Fibonacci cluster, a cluster that says this move to the upside should be limited, and we should expect sideways to down. And here's why. Because it's always good to have a why, right? Let's jump into a weekly chart. I use a momentum indicator called the Stochastics RSI. The settings on this, if you want to know, at the moment is 8533. And what we're looking for is this marry up. Look at this high, and it marries up with this crossover here. And look at the next one. Where are we right now? Well, we've just had a crossover here. So that tells us that the upside should be limited, and we should expect sideways to down, This is the weekly momentum indicator. So now we want to jump in to a 4-hour chart, right? A 4-hour chart. Go 4-hour chart, you get why? Because we want to look at, is there a 5-wave structure within this? A 5-wave structure. There's a couple of counts we can do. The obvious one to me is, this is Elliott Wave at its best. You know, we've got this nice wave 1, wave 2, what looks like a wave 3, 4, and here we just had a wave 5 poke its head above this high over here. And if we look at this pattern also on a micro degree count, it's another 5-wave sequence. Look at this. 1, 2, 3, 4, 5. So this one we can move to an intermediate count. And what we're saying here is it looks like we've hit this local high, and we want to be very, very aware of it. So we do some Fibonacci price extensions of this. A wave 1 to 3 projected from 4, it's got 62% and 38.2. So we've got this range over here. And then we want to do the same again, but this time we want to measure wave 1 and project it forward from wave 4. And the typical two numbers that we're looking for is 62%. You can see that's bang on that area here, and 100%, which is more up here, which is not so relevant. And then we're just going to do something called a Fibonacci external retracement of a wave 4, particularly this wave 4 here. This wave 4 and the external retracement. This is a confirming indicator. The two numbers that we want is 1.618 and 1.27. You can see that's in that range over here. And then we want to see, does it have a cluster of this one here? So we're going to do the same thing over here. You can see it clusters right into that range. And then last but not least, I'm doing this fast because I just want to get to the point. there's a couple of things I want to cover today. So I just want to go, boom. So now we've got this 2 degrees of wave counts. We got 1, 2, 3, 4, 5, and then a 1, 2, 3, 4, 5. And when you got 2 degrees with a Fibonacci cluster, this tells us a high probability that we've reached the high. We've got momentum on a weekly chart. Again, just to recap, top left, weekly chart. That says we're overbought, meaning sideways to down, like this movement here. This came down. Look at the confluence of events. The momentum was down. And then we're going to look at momentum indicator on the daily chart. So let's just zoom in over here. Let's just zoom in for this part. Look at this. This is one to be very, very aware of. This is called divergence. Price is moving up, but the momentum is moving down. They're showing weakness. They're showing weakness. Buying power is running out. Money that's buying Ethereum is running out short term, and therefore we should expect a correction. So I said today in the title, I said Ethereum to drop below $2,500 within a month. And I'm going to tell you why. Because I love it with technical analysis. It's all about probabilities, not certainties. So we want to see what is the probability of it dropping. So let's just clean this chart up for now. Let's just get rid of all this. These are all Fibonacci clusters. Let's just get rid of all this. Let's even get rid of this as well, just to clean up the chart. So let's just say this wave 5 is the high, this high over here. We should anticipate a minimum of a 50% correction from this move to the upside. %50 correction. So where's 50%? We want to put in here 0.5. Typical maximum is 78.6, and in between is 62%, so 61.8%. So we've got this range over here, right? So we can see here that the price is approximately 2,500, but often you'll see a correction go beyond the 50% to the 62% at 2,300, and then maybe even as low as 2,000 itself, 2,100 give or take as a minimum. But then we can also do something called a time retracement. The typical minimum time taken, and this is why I said within a month, is we measure this length is taken to do this 5-wave structure to the upside. A minimum correction is typically 50% of the previous wave up. And the date for that is the 9th of September to the 26th of September, which is bang on a month, bang on a month. So now we have this nice, neat zone as a minimum correction. Now, could it go lower and just make an all-time new low? Well, maybe not all-time new low, but lower than this previous low? Absolutely. So we should anticipate a movement to the downside into this region, into this time and price zone. When we get that data, and if it does unfold this way, we can see if it's likely to make a new low, or if we're looking for a correction where we should then anticipate upside movement. How does a correction typically unfold? We should always anticipate a minimum of 3 waves. It will look something like this more often than not. Crypto is beautiful because it often just unfolds perfectly. And as the structure unfolds, we'll be able to articulate more precisely when is this likely to end. It will coincide more often than not with the momentum, with price, with pattern, with time. And then when we've got that confluence of events, we can have a high probability, objective decision-making process. And then we can see, right, we should sell, we should buy, we should manage our position this way, X, Y, and Z. Is there anything else I want to cover with you? No, I don't think so. I don't think so. Other than, maybe one last thing. I'm going to quickly finish on a macro picture. Let's just say this is a 5-wave sequence of a wave 1. Let's say it is a correction of a wave 2. Then we should anticipate a wave 3, 4, and then eventually a wave 5 to the upside. If that is the case, we will be then able to project with high probability what is the likely wave 5, the wave 3, wave 4, and then a wave 5. You note that I've got a question mark with this wave 4 because it looks like an ABC structure. However, we want to be aware that it's not confirmed yet. We need this high to be taken out. Sound like a mafia guy saying it needs to be taken out. This high to be taken out with conviction, right? And we haven't done that yet. And once it takes it out and closes above that, that's when we can confirm that this low of a wave 4 has been made. We can remove this question mark, and then we can really project for the wave 5 high. So there you have it. Ethereum are likely to go below 2,500. Just be aware of that. When? September 9th to September 26th. I know that's quite broad, but as we get this first sequence of a wave down and a wave up, we can project with more accuracy where there's likely to be, because the typical time ratios using Fibonacci, time and price, and momentum and pattern with Elliott wave, that we can really kind of narrow it down. So if you like today's video, like, subscribe, hit the bell notification, take my free Elliott wave Fibonacci masterclass. If it's not in the link, I apologize. We are doing our best to edit the process, so I've been told it should be ready, but if it's not, it'll be in a very near future video. It'll be ready, like we're like literally just doing the final tweaks. So hopefully it's in the link. If it's not, it'll be in the next couple of videos that I launch and release. So let's finish off on a quote. Let's go for, this is my book, chapter 8. Let's have a quick read. You know, repetition being the mother of all skill. So here we go. The world's first. So it says, it has been my observation that most people get ahead during the time that others waste. Guess who said that? Henry Ford. Henry Ford. Yeah, visionary. Visionary, if there ever was one, boom, he's one of them. It has been my observation that most people get ahead during the time that others waste. In other words, keep working, keep training, keep learning. You know, we're in this game of crypto and blockchain, and a part of winning is losing, and knowing that we can't get it right every time, but when we do get it right, we make big profits. When we get it wrong, we want to make sure we're making small profits, break even, or minimizing any losses. Keep up the great work. See you soon.